We have been fooled so many times. A pump in prices comes in and we all rush in, forgetting that the crypto market is bound to volatility. This happened massively in 2021, when investors were mesmerized by the gains and went all in. Right now, those investors are full of regrets. An important lesson to learn is not all pumps are sustainable. But what about now? Nassim Nicholas Taleb, the influential author of Black Swan, recently took to Twitter to share his views on Bitcoin's recent decline. Drawing attention to the significant drop in Bitcoin volume, over 85% from its peak, he suggested that as volume diminishes, manipulation on the market can increase. He said, as volume drops, manipulation becomes easier, but at some point, manipulators will need to exit, Taleb commented. Concluding with this stark statement, this is how open Ponzi's implode. And yes, his observations align with recent data from Coinbase, one of the leading cryptocurrency exchanges. The platform's Q2 earnings report for 2023 revealed that both consumer and institutional trading volumes have decreased drastically, down by 70% compared to the previous year. But all hope is not lost, right? Factors like enduring crypto winter and a plethora of lawsuits filed by Securities and Exchange Commission could further challenge the industry. Adding to the apprehension is the current stability, or rather lack of volatility, in Bitcoin's price. Glassnode, an on-chain market analysis firm, highlighted the ongoing extreme volatile compression on the market as Bitcoin's price lingers below the crucial $30,000 mark, a level that has long served as a support barrier. Mike Crosby, CEO of digital asset exchange Blackfridge, noted that Bitcoin was holding cautiously just below the significant $30,000 mark. According to him, Bitcoin could still attempt an upward break of this level, but that chance diminishes with each passing day. It is worth noting that Taleb's skepticism around cryptocurrency is not surprising, since he has been a longtime skeptic. Back in June, he made a cheeky comparison, stating, "The main difference between Bitcoin and the Mafia is that the Mafia tended to deliver on its promise to offer protection." Therefore, his reasons are quite valid. Something incredible has happened recently, and everyone thought certain cryptocurrencies would be out of the dumps, but this leverage fizzled before it yielded greater gains. This is why we've been fooled several times. Most cryptocurrencies and crypto-related stocks zoomed higher after crypto proponents claimed victory in a closely watched lawsuit between the U.S. Securities and Exchange Commission, or the SEC for short, and Ripple Labs, the creator of XRP. Shares of the large US-based crypto exchange Coinbase traded nearly 18% higher. Meanwhile, the prices of cryptocurrencies, Cardano ADA and Solana Sol, were up roughly 22% and 16.5% respectively. It was big news for the crypto industry that the U.S. District Court judge made a big ruling in the lawsuit between the Securities and Exchange Commission and Ripple, which was expected to have major ramifications for the entire crypto industry. In late 2020, the SEC sued Ripple for raising $1.3 billion through an unregistered ongoing digital asset securities offering. Then, this lawsuit sparked a big debate on whether or not cryptocurrencies are securities or currencies. Crypto proponents asserted that cryptocurrencies are currencies and therefore must be regulated by the Commodities Futures and Trading Commission, so the lawsuit between the SEC and Ripple was potentially precedent-setting. In the ruling, the U.S. District Court Judge Annalisa Torres concluded that XRP tokens did not classify as investment contracts when sold on exchanges and algorithms, as the SEC claims, and therefore did not violate securities laws. However, Torres did say that the sale of tokens to institutional investors did breach the U.S. securities laws. It was seemingly a mixed decision, yet crypto advocates hailed it as a win, largely because if cryptocurrencies are not deemed as securities when sold on exchanges or algorithms, then exchanges are free to sell them without worrying about violating the law. The price of XRP had rocketed more than 63%, and this was good news for Coinbase because the SEC sued the exchange for operating an unregistered exchange, broker, and clearing agency for selling digital assets such as Cardano and Solana that the SEC believes are securities. At least, they were able to change the sentiment, and it boded well for both Cardano and Solana, which the SEC has tried to define as securities. Both of these cryptocurrencies have compelling technical capabilities on their blockchain networks. However, soon enough the buzz did die down. According to Decrypt, the price of XRP fell by more than 10%, as indicated by CoinGecko. The price decrease marked a loss of bullish momentum that followed that partial victory. Perhaps we should just concentrate on the upcoming Bitcoin halving. It has been historically proven to be a money-making season. Halving events have frequently been associated with increases in the price of Bitcoin, with significant upward momentum both before and after previous halvings. For example, during the 2012 halving, Bitcoin's price soared from about $12 to just over $200 in 1 year. Similarly, Bitcoin experienced a stunning recovery after its 2016 price halved, hitting a high of about $19,700 in December of 2017. Following the halving event in May of 2020, Bitcoin's price surged, starting at $8,787 during the halving, and the cryptocurrency experienced a remarkable rally, eventually reaching its all-time high of nearly $69,000 in November of 2021. Supply and demand is the basic economic principle supporting a price increase in response to Bitcoin's halving. The law of supply and demand states that prices tend to increase when a commodity's supply declines, and demand either stays the same or rises. The Bitcoin halving slows the rate of new Bitcoin creation and market release. Plus, Bitcoin halving events often generate increased market attention and hype. Expectations of lower supply and likely price increases may trigger positive feelings among investors and traders. This optimism could result in higher demand for Bitcoin as traders try to profit from the expected price gain. As a result, a Bitcoin halving can result in the self-fulfilling prophecy of rising market sentiment and demand. It's crucial to remember that during the halving occurrences, market sentiment isn't always favorable. Market participants may also experience FUD around the potential effects of a price halving. Short-term price swings and heightened volatility may result from the conflicting sentiment. Cardano looks prepared for this halving event. The network is making significant progress on its path to full decentralization, with the recent updates showcasing major advancements. The latest weekly report, as of today, highlights the important developments that are driving Cardano's evolution. The core technology teams have introduced a new mode on the SankoNet development network, and this move brings the Cardano community closer to understanding governance features outlined in major CIP 1694. To ensure secure node integration, a special measure called Bootstrap Peers has been put into place, indicating a step towards wider system distribution. In the world of transactions, the Ledger team has been fine-tuning how transactions are handled during the Conway era. In addition, the Plutus Tools team has been busy enhancing the capabilities of Macaroni and Marlowe, enabling them to perform better. Efforts to scale Cardano have yielded positive results, thanks to Hydra and Mithril teams. Notably, the Marlowe team has been refining the Marlowe runtime and improving its use of oracles. Furthermore, the importance of community involvement is evident in Voltaire, where discussions in CIP 1694 workshops are shaping participatory governance. The introduction of Intersect encourages individuals, developers, and companies to collaborate and shape Cardano's future. Catalyst, the project's funding mechanism, is also moving forward with innovations like the continuous testnet and improved user interface. The community engagement continues to be strong, laying the foundation for robust development. With the favorable Messari report, the Cardano founder, Charles Hoskinson, expressed his excitement and attributed the success to two factors. The veteran Cardano CEO noted that the Cardano blockchain emphasizes organic, methodical, real adoption. He noted that this adoption is driven by a decentralized community, not an astroturf pay-to-play centralized curator. Cardano is growing and every day getting more advanced. Amid these accolades, what Hoskinson failed to point out is the consistency with which the developers working on Cardano are rolling out new products and upgrades for the benefit of everyone on the blockchain. The Messari highlights of the protocol's growth was based on the immense patronage experienced by the blockchain's top decentralized exchange, MinSwap. While MinSwap dominated, a lot of emerging DEXs and protocols also accompanied the growth of the Cardano blockchain in the quarter under review. The Hydra protocol that went live on the mainnet has been tagged as a major competitor to Layer 2 scaling solutions that have proliferated over the past year. The strategy is quite simple. Invest in 10,000 ADA and watch it grow to huge returns. Of course, make sure it's money that you can afford to lose. Plus, dollar cost averaging also helps a lot. Dollar cost averaging makes it easier to deal with uncertain markets by making purchases automatic. It also supports an investor's effort to invest regularly. Trust me, it'll be worth it. But that's going to do it for today's video. Make sure you click the subscribe notification buttons, and we'll see you in the next video.